Hello, welcome to today's webinar on disruptive trends in talent development, led by Corey Greendale of First Analysis. My name is Greg Bybee, and I'll kick off with a brief overview of NovoEd and the trends we're seeing in the space. And then I'll turn it over to Corey to go through what he sees as the biggest trends. I've worked with Corey and his team for the past couple of years and have consistently found them to be among the most insightful across HR, talent development, and learning, not just about what's going on now, but also where the trends are going, and I think more importantly, where he thinks things should be going. Has a lot of deep insights into best practices. And unlike a lot of analysts in the space, I like to say Corey and his team sort of put their money where their mouth is. They invest as well as advise. So really excited to hear what they're seeing. So what we're seeing across our clients is first and foremost, a massive digital transformation of learning. And this is being driven by a number of key trends. Probably the most common that I hear talked about is today's learner. And that's both a combination of digital natives, millennials, or the latest generation, but it's also a change that's happening across generations, that employees and professionals are becoming more and more comfortable with technology, not just dealing with it, but expecting it, wanting learning to be digitally enabled, want it to be on their mobile phones, available when and where they want it, on demand, and with the same quality and user experience that they're used to with a Facebook or Google or an iPhone. At the same time, we're seeing rising costs for travel and T&E, hotels, flights, and so forth, but flat budgets in training, and in some cases even declining. And there's also a number of initiatives around travel reduction for environmental reasons. And so there's less and less desire and demand for in-person workshops and facilitated live training sessions. This is particularly made complicated with globalization. Many of our clients are now spread throughout the world, especially with acquisitions and M&A and offshoring and outsourcing. It's just becoming prohibitively expensive and difficult to bring people into a central location. And with the growth of the extended workforce, the gig economy, contractors, it's actually impossible to provide the same type of training and development because that would qualify them as an employee. And so there's a legal concern there around how much training can be provided and how. But what I think is most exciting, though, is this focus on business agility. And we've started to see HR teams and learning teams have people with the title Agile. I've actually seen Lean and Scrum Master in titles. And HR and L&D organizations are really trying to be much more agile in delivering and deploying training. And the old model of, kind of what is it, ADDIE, to develop the process, do a train the trainer, roll it out within one country, and then do a train the trainer model to roll it out globally. By the time it gets to the entire organization, it's out of date. There may be changes. And if you're launching a product, for instance, you just can't wait for that train to get deployed. So there's really a need to move online faster to be able to deploy training instantly across an organization and update it and modify it. And this enables companies to really reach the entire organization. Well, one thing that I've always kind of sad to see is a lot of companies have really, really great training, but it's limited to the top 5 or 10% of an organization. The top percent of an organization will go to great executive education programs. The next tier will get great coaching, leadership development, in-person programs. And often the rest of the organization doesn't have access to that. So by moving online, you're able to scale great training toward the entire organization. But what's strange, and I'm curious to hear kind of what Corey's seeing in his side, but we are seeing a slight slowdown. Over the past 10, 20 years, there's been this massive migration in online learning. First, computer-based training, CD-ROM, digital, and now online and mobile-based training. But we're starting to see this conversion slowing down, and our clients are starting to say that they've run out of the low-hanging fruit, that they've already converted compliance training, they've already converted their IT system, some of their onboarding, a lot of the knowledge-based training. But what's left is what I call sort of higher order skills. It's the soft skills, interpersonal skills, executive development and leadership, sales, customer service. These are skills that require behavioral change. And as a result, a lot of them are still being delivered in person. And if you think about why for just a second, it's kind of clear. If you're thinking about your best learning experience, was it a lecture, was it an online course, or was it a great in-person collaborative workshop? What we hear consistently is that it's the workshops where there's collaboration, experiential learning, discussions, problem solving, back and forth feedback. That's where the learning happens, especially for these interdisciplinary, interpersonal subjects. And the challenge, of course, is that most online learning replicates the lecture hall. It's sort of a stand and deliver instructivist model, stage on the stage, recording videos, quizzes, click next to continue. And so what we really need, and what NovoEd has built around, is trying to make online learning more like great in-person learning, more like the workshop and the experiential project-based courses. And that's exactly what NovoEd is. So we offer an online learning platform for the modern learner that's mobile compatible, flexible, and really empowers great instructional design to reach learners when and where they are. We've got great tools to keep learners on track, very easy to pick up learning where you left off, see exactly what modules you have remaining and how you're performing, both with gamification and good progress tracking, mobile compatible across devices, and most importantly, a lot of project-based collaboration, team-based features, the ability to pull people together into teams, break them off to work on a project, collaborate, meet, work on a Google document, set up a virtual live meeting, a WebEx, and then share their work with each other. And this is where a lot of the power comes from in social learning. It's not just discussions and posting and liking, but it's when you are contributing to the knowledge base and you have a team of people collaborating, maybe one marketing team in the US with a marketing team in Europe, sharing best practices, each presenting how they would approach a problem, asking each other questions, giving each other feedback, and really iterating on that knowledge. Or imagine teams interdisciplinary with a marketing person, an HR person, an operations person working together on a corporate innovation challenge, and then sharing that across different groups and getting feedback. We also have a number of capabilities around feedback and mentorship to facilitate the exchange of information, both formally and informally, both formative and summative for grading purposes, with a wide range of analytics and far beyond just who watches the videos and what they do on quizzes, but really showing how people are engaging, what content they're interacting with, how they're discussing that, how that's impacting their teamwork and collaboration. Because if you can't measure it, you can't manage it. And we really care about being able to take that data and that learning from the learning to improve the learning experience itself. So we work with a number of organizations, really broken into large organizations, companies doing internal employee training like GE and Comcast, as well as a large number of executive education firms that are training their clients or students. Business schools like Stanford GSB and Wharton, UC Berkeley, as well as consultancies and training firms like IDEO and Deloitte. But we're here to hear from Corey. So I gave you a little bit about what NovoEd is seeing and where we come from. But very excited to turn it over to Corey. And as I mentioned, really one of the leading, I think, most insightful analysts in the space. I'll talk about the trends that he's seeing in talent development. So Corey, let me turn it over to you.
Great, thanks, Greg. Thank you for the very kind introduction. Thank you to NovoEd for the opportunity to join today, and also thanks to all of you on the line for taking a little bit of time to join us. I'm going to take a few minutes to talk a little bit about what I do and what First Analysis is. Not because we're actually we're not selling anything, so there's no ask here. It's mostly to orient the conversation. I guess the only ask is that we put out a lot of research on the space, on human capital technology in general. We like to have a dialogue with people who are actually using various technologies that helps inform our analysis and our decision making. So to the extent you're interested, please shoot me an email. My email address is at the bottom left here, cgreendale@firstanalysis.com, and we're happy to add you to the research distribution list. You'll get our research reports on the space, and happy to share those, and always interested in any feedback that you as practitioners and users of technology have to share. So, quick overview of First Analysis. We are analysts. As Greg mentioned, we do research in specific industries, and my area of focus is human capital technology. We use that research in a few different ways. We, as Greg put it, we put our money where our mouth is. We make direct investments. So we are venture capitalists making investments in the human capital space, as well as I have a number of peers who focus on other industries, things like marketing tech, healthcare IT, and a number of others. We have an investment banking group that does transactions in the space. So for people that are looking to buy or sell companies or raise growth capital. They're particularly proficient at that, working with earlier stage companies that are growing nicely but need capital to continue accelerating. And then, as I mentioned, we do deep research on these industries. That is published in a couple of different forms. One is we do deep white papers on specific topics, which I'll give a couple of examples in a minute. We also provide research on public companies. So if you ever watch CNBC and see analysts who are recommending buying or selling stocks, we do that. So I cover companies in the human capital space, and if you ever are either really interested in it or just super bored and are looking for ways to spend time, public companies do conference calls on their earnings every quarter, and you can hear me on those quarterly calls. So specifically in the human capital tech space, as I mentioned, we cover public companies. One of the trends we're seeing is, there's historically been a siloing of development. So people go to school through high school, and then you sort of start life over in some ways as adolescents. That's probably not a bad thing, but when you go to college, it's kind of a blank sheet of paper. And then when you're done with college, you enter the workforce, again, a blank sheet of paper. And then within the workforce, there's hiring, there's onboarding, there's talent development, performance management, and historically those things have been fairly siloed. And for a number of reasons, we think those somewhat artificial barriers are coming down, and that these different worlds are going to get more and more integrated. But our coverage of public companies reflects that perspective. So we write research on everything in the human capital spectrum, starting with providers of traditional kind of entry-level education, so K-12 and college education, public companies like K-12, Capella, Strayer. And then we write research on what are traditionally called education technology companies, which are technologies focused primarily on institutional education, things like Instructure, which their big product Canvas is the fastest growing LMS in higher ed, and big in K-12 as well, a little bit in the corporate space, through 2U, which is a company that helps nonprofit colleges grow online programs, and then up through the workforce, companies like Workday and Cornerstone that I'm sure you're all familiar with. And then we do a lot of work on private companies as well. Greg was kind of ribbing me for the fact that NovoEd is not in this list. It is a very wide array of companies that we have a dialogue with, all of which informs our analysis, and also hopefully provides us direct investment opportunities for our venture funds. And then at the bottom, a list of companies that we've actually invested in, and that also spans the entire human capital space, ranging from a company called learning.com, which is software for K-12 education, up through Yellow, which is a recruiting technology company, and then into the kind of ongoing business, NetChecks, which is a software talent management and payroll company for the small and medium business market, Chrome River, which is a T&E expense management company, number 2 to Concur, and so on. Again, all this background to suggest that I'm happy to answer a wide array of questions as we look at kind of everything in the space. So I will continue going through my slides here, but if you have questions as they come up, happy to address anything about the talent development space, HR tech in general, venture capital. If you have questions about that, I'll probably defer on questions about what's happening at Uber, but questions about kind of the capital markets, public companies, any of that, I'm happy to address to the best of my ability. And then within First Analysis, what we do is pretty unique. There aren't a lot of firms that do both the kind of deep research in specific industries and also make direct investments that we do. So we publish all these reports on public companies, private companies, that generates deep relationships. And as I mentioned, part of why I appreciated Greg asking me to do this is it gives me the opportunity to address a lot of folks who I'm guessing have never heard of me or First Analysis, and would love to get you on our distribution list and get your input on what you're seeing in the market. And then that hopefully generates returns both for our investors in our funds, which are traditionally family offices, that sort of thing. So always looking to build relationships with that kind of group, as well as for companies that we invest in and for investors in public companies who use our research to make their investment decisions. I mentioned that we write these white papers. This is an illustration of a series of white papers that we did over the past couple of years. And we think these worlds are converging, but there's enough kind of going on separately that we thought that a series was warranted as opposed to one giant white paper. So we did a piece on talent acquisition and analytics technology, focused on what we think is going on in that area, where it's heading, and a lot of data underlying that. Second one was on the primary focus of this webinar, which is talent development. And then the most recent one was on talent performance and engagement technology. And in all of these, and also, again, if you email me, I'm happy to send you copies of any or all of these white papers. So it covers trends in spaces, kind of gives a taxonomy of each of them, and then also mentions or profiles, in all cases, I think 60 or more private companies that we think are doing interesting things in these areas. And NovoEd was profiled in the talent development white paper. So a couple of poll questions just briefly here to help orient the rest of the conversation. First question, if you could answer this, I just want to get a sense of, for the folks on the line, what is the size of your company? So 0 to 100 employees, 100 to 500, 500 to 1,000, 1,000 to 5,000, or 5,000 or more. So I guess the poll is open if you could answer that. Okay. Looks like we have sort of a barbell here, so either the very large or the relatively small. So with that in mind, I will try to address all parts of that market in the conversation here. And then second question, so if you could answer this question, what's your role in your company? Are you the CEO, CFO, or owner of the business? Chief Learning Officer? Are you in HR or sales and marketing or something else? All right, pretty good dispersion. Now, I wish I could blow up that other a little bit to hear more about what people are doing, but it looks like a pretty wide variety of roles as well. So I will, rather than being super targeted in the discussion, I'll kind of give a high-level overview, and then if we're not addressing the key questions that are on your mind, please chime in. I'll also say that this presentation is fairly data-centric. I will sprinkle in opinions and some things that we think are going on in the market. Part of the goal here is to help you make decisions about kind of what you think you should be investing in, but part of it is also to be helpful for those of you who are in roles where you're trying to justify budget for some of these things, like talent development technology, talent acquisition technology, providing some underlying data as to why it's so important to be investing in those things. And it's just going to get more important, and that's true regardless of economic cycles, as you know, these areas do tend to be somewhat cyclical, and companies tend to cut their learning and their recruiting budgets when times are tough. And some of that will always be true, but there are some demographic and economic trends that suggest that the companies that cut less and continue investing in those things through the next downturn, whenever that happens, will be at a sustained advantage coming out of the downturn. So it's really important to kind of recognize what's going on more from a secular point of view, and not be short-sighted through a budget cycle. So starting with some data here, some of this will not be surprising to you. Hopefully some of it will be eye-opening, but this slide, I'm guessing, is not too surprising, which is it just shows how the unemployment rate has trended over the last decade or so. Obviously spiked up around the recession and has been steadily declining since then. The overarching kind of direction to what I'm going to talk about now is where the labor market is heading, and why it's important to be investing in these things. And from a cyclical standpoint, clearly labor is moving in the direction of being a seller's market, where unemployment is at low levels. which gives workers more options. And then if you look at the number of unemployed people per job opening, that is way down from the peak during the recession. This is some data that perhaps you have not seen, or maybe slightly more surprising. Beveridge curve is data that maps the number of job openings against the unemployment rate, and hopefully the acuity of this is coming through on your screen. If you look at the curve on the left, the one sort of left bottom, the one that's red near the top and green as you get toward the bottom, that maps the relationship prior to the recession, like 2000 through mid 2009, and it shows the historic relationship between the job openings rate and the unemployment rate. Generally and simplistically, when the economy gets better, the unemployment rate goes down and the number of job openings goes up. And historically, you saw this, not exactly linear, but semi-linear relationship. What we found is that since the end of the recession, rather than this relationship moving kind of back up the curve, which is what you would have expected, instead the entire curve has shifted, so that for a given level of unemployment, there are more job openings than there had been in the past. And there's a couple of reasons for this, but what it suggests is that there is a skill mismatch, that the jobs that need to be filled, there just aren't enough people available to do those jobs. So unemployment rates at low levels, there's still a lot of unfilled jobs out there, and they are remaining unfilled because of this skill mismatch. And then, as I mentioned, we think labor is increasingly becoming a seller's market, where the worker has more and more of the power. That's only going to get tougher from the point of view of the employer over the next decade or so. This is demographic data from the Bureau of Labor Statistics. And what it shows is that although the total workforce continues to grow, that the vast majority of the growth is coming in adults who are 55 and older, which is partially the population trend. It's also a result of boomers retiring later. And if you look at kind of the entry-level workforce, so people between the ages of 16 and 24, both for demographic reasons and also because of kind of trends in education of people and when people are staying in school, that population decreased 4% in the decade ended 2014, and is projected to decline 13% in the decade ended 2024. And this, if I can kind of, the call to action of this conversation is this slide. It shows that if you are not focused on acquiring the right talent and developing them and keeping them engaged at work, you're going to have a big problem, because this is the workforce, this is the leaders of the future, and that population is declining. So the companies that make the investments in building an employer brand, building a pipeline of talent, developing the talent in continual development, making sure people have a career trajectory within the organization, and particularly among millennials, which on balance, do not in general feel as close a tie to their employer as people as workers in the past might have done, and are always looking to keep developing and keep moving. It's super important for employers to offer that development and career trajectory internally, or they will look for it outside, and it's going to be harder and harder to find people to replace them, given this demographic trend. So please keep this one in mind. And then looking at it more, part of this is the trend in millennials that I was mentioning. Part of this is cyclical and economic, but as the economy improves, more people quit. You got to keep your people engaged and developing over time, or it's sort of a downward spiral as people think that they can get better, have better career opportunities elsewhere, and develop their skills more elsewhere. Opportunities are going to get, it's going to get more and more competitive. So it's really important to invest in these things, both in terms of technology and in terms of culture. And then sort of exacerbating this shift in labor to being a seller's market is the fact that despite what you may think intuitively, given changes in technology, productivity is actually, it's still growing, productivity in the workforce, but it's growing less than it has at any time in the post-World War II era, where since the recession, annual productivity is growing about 1%, which is not sufficient to drive meaningful growth. And a big piece of that is ensuring that people are as the skills needed continue to change. You need to make sure that your people are developing those new skills, continually developing, in order to keep increasing productivity. So in other words, you can't just throw technology at them. You have to make sure that they're sufficiently educated in using that technology appropriately, and in the cultural structures required to work in the team that's going to make it productive. Now, the good news is that on average, companies are aware of these issues. And this data is from a survey by Brendan Hall, asking business leaders, what is the most important strategy if you look throughout the entire business to achieve success? And you would think, if I'd asked this as a poll question, my guess is the most common answer would have been something like focusing on sales or marketing or business strategy. Well, the good news is that the most common answer to this survey was people strategy, as business leaders are aware of all these trends, and increasingly aware that your people have to be a competitive advantage, and if you're not focused on them, you're going to lose. They are increasingly focused on people. Still, only 30%. I'm not sure if you're asking for only one answer, it's ever going to get to 50%, because clearly business strategy and sales matter, but it's a really good sign that people are at the top of this list. And then another kind of corroborating piece of data. This is a survey that was done by Price Waterhouse of global CEOs, asking more kind of the flip side. What are the threats that you're most focused on if you look at your business over the next several years? The top one was uncertain economic growth. Second, overregulation. This was pre-election, so maybe that shifts a little bit. But the third one, they mentioned over things like sales that and more forward-looking stuff like that, is availability of key skills. So a good sign that, and this is largely large employers, that global CEOs have identified availability of key skills as a really important area over the next several years. More data. This is from another PwC survey on the same topic, saying that the most important thing to global leaders is focus on pipeline of future leaders. Also a good sign that there's increasingly a focus on talent development, and the companies that are effective at developing their people are the ones that are going to win in the long run. Asking about what strategies are companies using to make sure that they have the talent in place. Interestingly, given the focus on the gig economy, for example, you'll see that relying on contractors and freelancers at the bottom of the list, as is focused on artificial intelligence. Obviously a big, at least from my perspective as an investor, a big topic of conversation right now. It hasn't quite worked its way through. It's clearly near the top of the Gartner hype cycle. Hasn't fully worked its way through to the organization yet, and part of that is the rhetoric may at times be somewhat ahead of what the technology can accomplish. But the good news is organizations are focused on recruiting the right people, having the right people in place, making sure that their people have the development and the processes they need to succeed. So kind of old world stuff, but still super important. And then diving into technology specifically, this piece of this presentation, I give presentations like this to a lot of different groups, some of which I'm sure are significantly less familiar with what HR tech looks like than the folks listening in here. So this is probably old news to most of you, but this is kind of a hierarchy of what the human resource management system looks like. And we're focusing today largely on the right side of this, talent management systems, including talent acquisition, talent development, and talent management. Now, looking at trends in HR tech spend, this is both, at the time the survey was done, this is both backward-looking and forward-looking. And what you'll find is that, again, good news from my point of view as an investor, that companies are very focused on HR tech. There are very few that are cutting their spend on HR tech. Depending on whether you're large, medium, or small, the bulk are either increasing spend or keeping it steady. Again, not surprising given all the focus on people and a belief that technology can help make people more productive and accomplish these things. But again, a good sign that business leaders are aware of the need to invest in these things. And then within this is also probably kind of old news to a lot of you, but within HR tech, as within all technology, there is a significant shift to the cloud for a whole bunch of reasons. And within talent management, specifically in the HR suite, it's probably the most pronounced shift, where this is data from Sierra Cedar. As of 2016, 66% of companies were using cloud deployment for their talent management. That was expected to go to 72% by the middle of this year. And commensurately, the number of on-premise deployments is declining. There's a whole bunch of reasons for this, and I suspect in some cases I'm preaching to the choir, but there are cost reasons to move to the cloud. There are version reasons. A big piece of it is usability, and then over time, data analytics and benchmarking is enabled if you're in the cloud, not possible if you're doing on-premise deployments. So for a whole bunch of reasons, we think that this is a trend that is not only here to stay, but will accelerate further into the parts of HR tech that so far have been less kind of forward-looking in using the cloud. Within the human capital suite, a lot of different areas of spend. Learning and development is the second largest area. Again, maybe a little surprising intuitively, maybe not to the people on this call, but if I asked investors more broadly, I think they'd guess more the core HRIS, payroll, benefits. I think they would guess those things. So I'd say, again, a very good sign if you're looking out to the future that the companies are increasingly focused on the need to develop their people and investing in technologies that will enable that to happen in a more effective and efficient way. Part of why we think that's happening is, so this is a slightly complex slide, but this shows survey data that illustrates, if you look at kind of the top bars, so reading across from left to right, the 78, 78, 74, those numbers indicate the importance of different areas within talent as identified by global business leaders. So at the top of the list, culture and engagement, leadership, learning and development. And then the bars across the bottom, the green bars, are the survey respondents' sort of indication of how ready they believe their organization is to address these issues. So across the board, readiness substantially below importance. So grading on a curve to the areas where there is the biggest disparity are culture and engagement and learning and development. So this is not an easy area to address. One of the challenges in learning and development is always kind of, how do you know when you've gotten there? You need to develop your people. How do you know what you need to, what skills specifically you need to develop? How do you know whether the training was effective? If it's compliance, that's easy because they either take the course or they don't, or they pass an exam or they don't. But if it's more soft skills, how do you know if it's effective? And increasingly, there are ways with tools like NovoEd to deliver that effectively, as well as to measure the outcomes, which we think will help close this gap over time as employers get more familiar through use of technology with what their people know, where the areas of weakness are, use tools like what NovoEd has to deliver that in a more effective and cost-effective way, and then measure whether their people are actually learning what they need to be learning. Diverse views on what are the most valuable features. This is from a survey by Sierra Cedar and was actually asking specifically about LMS. So the learning category is substantially more diverse than LMS, so this is somewhat limited. But to me, what this says, the most the number one answer was video virtual classroom. That's probably not surprising. That's one of the earlier innovations. Kind of a standard classroom, not the more diverse stuff that Greg was mentioning at the beginning of this. Industry-specific courses, that sort of thing has been out there for a while. Customized courses, but there's a lot of interest in other areas like coaching, mentoring, learning communities, intelligent learning recommendations, learning analytics. All of which we think provides an opportunity to significantly improve the outcomes of learning, significantly improve business outcomes that result from learning, and also provide opportunities for investors like myself in the space. As I mentioned at the beginning, I believe that this sort of siloing of education, then talent acquisition, then learning and performance management, that is going to come down over time, and is already the walls of those silos are already coming down. There's an increasing focus on employee engagement, meaning when people are at work, are they actually engaged? How much of their brain power is being spent on what they're doing? Are they psychologically aligned with their employer? Are they excited about what they're doing? Are they spending their time, literally looking for a new job, or mentally with one foot out the door? That's always been true. That people are, you're never going to have 100% of your workforce engaged, but it's increasingly important given the demographic and cyclical trends that I was mentioning earlier, with the shift in the labor market, where good people are tougher and tougher to find and keep. But it also is not in a silo. Like, there are solutions for employee engagement that mostly consist of technology solutions that consist of pulse surveys, where you're asking your employees, essentially, how are you feeling about working here? And that can be good, because employees like to know that their employer cares about them. But employee engagement, in my view, is tied at the hip to learning and development. And it kind of moves in both directions. That if organizations invest in the development of their people, that leads to career progression and makes people feel more engaged. And on the flip side, people who are more engaged are more likely to learn and need tools to help them learn more effectively, and that leads to better business outcomes. So this is data. This is somewhat discouraging. I don't know how surprising, but somewhat discouraging data from Gallup, which this is a survey of U.S. employers, that suggests that the number of employees who are actually engaged at work is less than a third. According to their data, it's improved marginally over time, but less than a third. So this is highly relevant, not only because there's a question of how productive those people are, but also because increasingly, as people have more job opportunities, if you don't feel like your employer cares about you, you don't feel engaged at work, or in case of this data here, you actually think the employer has a bad reputation, you have a lot of options out there, and you're not going to stick around. And as the economy has gotten better, the percent of people willing to work at a company with a bad reputation has declined much more meaningfully than the percent of engaged employees has increased over time. So between 2014 and 2016, the percent of people willing to work at a company with a bad reputation has dropped from 76% to 69%. And reputation is not just about, I'm not going to name names, but dragging people off of aircraft, for example. It's also about how you treat your employees, and are you investing to develop? You care about your employees' career progression and their development. So increasingly, employers have to care about their internal brand as well as their external brand. And if you do not focus on building an internal brand, the worst case is you actually have a negative brand, that you have a bad reputation with your employees, which is going to be sort of toxic over time. But even if you have sort of a neutral internal brand, that's going to be a competitive disadvantage over time relative to employers that are actively investing in building the brand and making it easier to recruit people over time. Those people will be happier to develop and stick around at a company that cares about them. And those that are not investing in those things will be, we think, somewhat left behind. And not only does engagement matter for keeping people around, there are tangible business benefits aside from that. So also data from Gallup So this is data looking at the top quartile of employee engagement, companies with in the top quartile of engagement versus the bottom quartile. Profitability, 22% higher. Productivity, 21% higher. It manifests itself in better customer perceptions, and then things like turnover, safety incidents, significantly lower if you have high engagement. So this stuff is really relevant, and we think engagement, a good part of its culture, and tied to that is how you're developing your people and making sure that they are progressing. Another specific trend, probably not surprising, is mobile. Mobile HR has been somewhat of a laggard in adoption of mobile technology relative to areas like marketing, for example, but it is slowly catching up. We're approaching the point where more than half of companies have HR processes that are mobile enabled. We see that with kind of a new wave of cloud-based payroll providers that are adding more self-service. As you do more in the cloud with learning and go beyond compliance with learning and development, compliance can, in some cases for compliance, it has to happen in a specific setting, and you can't make it mobile. But as you go to more informal learning communities, mentoring, those sorts of activities, mobile makes all the sense in the world. If you look at roles like salespeople, where they're out in the field, maybe they come to a central location once a year for sales training, but beyond that, you don't want learning for salespeople to be a once a year kind of thing. It has to be happening all the time. Mobile makes that very possible. So we think this trend is going to continue, till to the point where it's a very high percentage is mobile enabled. And then analytics. Analytics are increasingly working their way into the business world. Again, started primarily in sales and marketing, but increasingly we're seeing it in HR. The use case we see most commonly is retention risk, where companies are looking at things like absenteeism to identify employees who may be at risk of leaving. But we think there are significantly more use cases than that. Part and parcel of why we think these different siloed worlds are going to converge, because we think there are ways that you can use data about learning to help inform decisions about organizational structure. You can measure whether learning, you can do kind of control groups and look at whether certain learning improve business outcomes, and use that to improve your processes around L&D. A lot of this stuff is still pretty nascent. There are only 4% of companies in this survey that said they believe their approach to talent analytics is effective right now, but 64% say that it's critical over time. So we think it's not. We expect that we'll see that 4% grow, not to 64% anytime soon, but we expect that number to go up over time as providers like NovoEd continue to have more and more effective tools to allow measurement and bringing the same kind of rigor to talent as companies currently bring to sales and marketing. Also on analytics, still, companies expect to embed analytics significantly over the next few years. If you look on the right side, 71% of respondents to the Cedar survey said they expect to embed analytics in their talent management within the next few years, but it's still a very small percentage that we're doing it last year and starting to adopt now. Analytics, part of why we think it's important, this is a very simplistic way that we look at it. Not only is there data, but it's kind of a self-fulfilling cycle that as you have better data that allows you to engage your people better, as they get more engaged, they use the systems more. That provides better data. The data gives you better insights that lets you manage better, and then in turn that leads to better feedback. So we think companies that are not yet on the analytics bandwagon should be looking at it, because we think it is going to be today a competitive advantage, but eventually a competitive disadvantage if you're not leveraging them effectively. Another big topic in the HR world is, actually in the entire business world, is artificial intelligence. And will robots take over everybody's jobs? The good news is, if you look at sort of what areas are difficult to recruit for and important, things like creativity and innovation and leadership are still at the upper end of the spectrum and not easy to find. So certainly, there's certainly some jobs that we think will be made obsolete with artificial intelligence, but we don't think we're close to a massive wave of robots taking over everybody's jobs. At this point, we think it's more enabling people to do their jobs more effectively, and that there are very important skills that, as long as people are the end consumers, we think there's an important role for people in the organizations as well. So this is our hedge clause, which I don't think I've recommended any stocks, so I think we're okay. But that's kind of our overview. And with that, I'm happy to take questions about specifically, where we think the industry is heading, or technology, or anything else.
Great, thank you so much, Corey. A question for you. So you mentioned that at the beginning, the workforce productivity it's still increasing, but not as quickly as it was in the past. The sort of the post-recession era, the improvement in productivity is less than in the past. But given kind of what you just said around AI, improving productivity, I'm curious kind of how you reconcile these. I would have imagined that with technology, productivity would be increasing dramatically in the past 10 years relative to before.
Yeah, so I think a big piece of that is, if you look over that entire spectrum, you had some pretty big revolutions in that time, with shift to mainframes, and a shift from where the U.S. was focused from a manufacturing economy to an information economy, and those were the big shifts. And then you had somewhat of a bigger shift with the advent of the internet. More recently, it's been more on the margin, and I think that's partly because of culture has been slower to change than technology. At some point, you can give all the tools in the world, but cultures need to change too. So you can throw great learning tools at companies, but if you still insist on dragging people off their job for 3 days out of the year, and that's really what their training consists of, it's going to be tough to improve productivity a lot with that. So we think I think that's part of it, and I do think that as the leaders in the U.S. are increasingly people who grew up with these technologies, I think that in part you'll start to see the productivity catch up as people use those technologies more effectively. So I think that's a piece of it, and certainly we're keeping an eye on AI, and that may help as well.
Interesting. And on this slide, there's a question: is creativity and innovation specifically related to technology, or is it independent?
No, this was not. This question was more around what areas are important and difficult to recruit for. It was not intended to be tied to technology per se. It's more sort of, what people skills are important.
Mm-hmm. It's interesting, the slide you had on top, how was it worded? Top, like the people strategy versus operational strategy, sort of top important areas that CEOs are looking at, where the people strategy was first. Yep. Innovation strategy was lower. I think it was like 7% or something, 10 or 7%, somewhere around there. But then here, that's kind of rated very important, and we definitely see across our clients, one of the most common topics that's being taught online or being done with NovoEd is innovation, creativity, design thinking. So I was wondering if you could share more what you're seeing in sort of the creativity innovation space. How big of a trend is that, and what are you seeing people doing to improve their innovation abilities?
Yeah, these things are not totally distinct categories. So, the companies that are going to succeed are those that are bringing innovation and creativity to their people management. So, I think you see somewhat of a diversification, and I'm going to make a really broad generalization here, which is, there are certain industries or certain sizes of companies and certain industries where you see more of that. And while there are technology leaders among large companies, in general, the innovation tends to come from smaller companies. So I do think that things like the cloud and development cycle shortening are making it more possible for all companies to be better at creativity and innovation. I think today and historically that tends to come more from kind of the smaller companies in certain sectors. But I also think that just as there's a recognition that people are really important and you got to be focusing on learning and development, part of the goal of that, it's sort of cause and effect, but part of the goal of that is making sure that the employer remains competitive and forward-looking and innovative. So I think it's important to make sure that as you're doing your development, that it's using tools and using curriculum and culturally in ways that are going to be reinforcing the importance of innovation, because these things are not, if you train your people super well, but it's in sort of outmoded ways of operating, that's not going to be highly successful.
Gotcha. And with the data you showed on, as economy improves, kind of job quits increase and retention can decline, I guess what are you seeing as successful strategies to, well, I guess first, how would you suggest an organization kind of invest their resources on retention strategies, so learning and development, culture, et cetera, versus increasing in recruitment strategies and trying to bring more people in faster? How do you think about this trade-off? It's often the same teams that are sharing resources.
Yeah, so I wish I could say it's really both. It's not either or. The reality is they're pretty intertwined. So obviously, there are only so many people in the world. You have to focus on recruiting unless you're a company that's willing to shrink, given the demographic trends that we talked about. If you don't focus on building your talent pipeline, you're going to lose. And part of building the pipeline is your employer brand and the internal culture. Recruiting is increasingly social, so you can't just put an ad up on Craigslist for most industries anymore. So I think that's super important. And then once you have the people, then you got to invest in their development over time. So it's not, I don't have a formula that says it's 50% one, 50% the other. I think the two are pretty linked. But I think you need to have a very sort of strategic view of what people mean in the organization and the culture you want to build, because those things, whatever you're investing in recruiting and learning and development and engagement, that will make all that more effective. Like, you can throw all the money in the world at learning and development, but if people feel like this isn't really tied to my job and I'm not really improving, and my employer doesn't care about my progression, and there are no opportunities for me, it's not going to make any difference. And at the same time, if there's a view that it's sort of a lousy place to work, you can throw a lot of recruiting budget at a problem. It's not going to solve the problem in the long run. So I realize I didn't answer your question at all, but I guess, but the answer is you got to be strategic about these things. You can't look at them as silos. It's important.
Yep. And do you see as I was thinking about this, kind of this famous trope in learning around a CFO asking what happens if we're training people and they leave, aren't we wasting our money? And then the HR teams or the CEO says, well, what if we don't train them and they stay? Do you find is there like a self-selection in terms of who's leaving a company and who's staying in terms of high performers or low performers? Is there this adverse selection where if you're not developing your people and working in your culture, that the people you're losing are the best performers, and the ones that are staying are the ones who are disengaged and are just sort of clocking in?
Yeah, absolutely. I mean, that's sort of part and parcel of why you see from that Gallup data that massive gulf between the high performers in engagement and the low performers, that invariably the people who want to continue progressing and who are capable, most capable and most in demand of working somewhere else are the ones that are going to leave. So that's why you got to be building these things from the moment of first contact with a candidate, and you got to keep doing it. You can't say, phew, now we have the seat filled like that. You're always selling to your people as well as externally, and part of that selling is investing in their development. By the way, Greg,
there's a lot of
one other thing.
Yep.
I was just going to say, I should have mentioned this earlier, that if anyone on the line wants these slides, I'm happy to provide them. So if you email me at cgreendale@firstanalysis.com, I'm happy to send the slides.
Fantastic.
Sorry, I cut you off.
Oh, no, just giving people a moment to see if there's any other questions. I think there's one question from Debbie around demo slide breaking down 25 to 54. I'm not sure I understand the question, though. Debbie, if you don't mind, maybe leaving a little more comments or notes, and we can help answer that. Corey, I'll read the question. She says, is there a faster growing subset of the audience, and thoughts about difference in need for skill development and for skill hiring for the subset audiences on the demo slide. But we'll see if she can send us more clarification, unless it rings a bell for you.
I'm not sure the demo. I mean, this probably isn't answering the question, but yeah, the faster growing you are, the more you got to keep up. It is not a trivial exercise. For a rapid growth company, you got to be 2 steps ahead, and don't figure out your development after you've got the people in their seats, because they're going to realize productivity starts like before you're actually joining the company. So you got to have the right processes and technologies in place to make sure people are developing. From the minute they hit the ground.
This has been really, really interesting. I've been, frantically taking notes. I'm glad you'll share the deck.
Yeah, no
worries. A lot of great data that's going to take some processing. Well, here's another question around crowdsourcing in relation to organizations' captive talent.
Just what we think of it.
Yeah, I guess, if you've seen any trends in crowdsourcing and kind of its importance or its impact on companies.
Yeah, so we have not. I have not seen it. The answer is yes. I haven't seen it as a mega trend. So we tend to see it somewhat in the area of software development, and somewhat in the area of R&D. Certainly it's part of what seems to be more of a mega trend, which is the gig economy, and are people increasingly going to be self-employed and do more project work as opposed to stick with one employer for years. I think this is a weighty topic that would go on for the next several hours. There's good and bad to that, but certainly in the case of crowdsourcing, if you can incentivize people properly, there's a lot more intellectual fire. No matter what you do in one organization, there's always a lot more people out there that could probably be helpful. So I think it's an interesting area, and there's some companies that are doing some interesting things around that concept.
Great. Well, we're at 11 o'clock here in San Francisco, so we're at our hour. Thank you all again very much for joining. Please feel free to continue sending questions to Corey or myself. And Corey, thank you so much for taking time to walk through this data. I mean, especially that what was the slide called? What was it? There's the one about the mismatch in jobs. Like, that was a very kind of aha slide. The beverage curve, I think. Beverage. That was really interesting data here. I think there's a lot of content that HR teams are going to love to actually take to their CEO and use it to get more budgets. They see, what we're doing is really critical for the company, and actually has impact in the profitability as well. So thank you very much for sharing all
Absolutely. No, I'm happy to do it. Thanks for inviting me, Greg. I enjoyed it.